Okay, good morning, good afternoon, good evening, wherever you are in the world. Welcome to Do Prime training session. So today we are going to learn mastering the technical analysis, right? Technical analysis of forex trading. I am Dr. Mola, also known as Samola Jitiaje, right? So today we're going to go into technical analysis. So we're going to do a lot about the technical analysis. I wish to go deeper, but we don't have much time. So yes, I will go into it, but if time does not permit, then we would end at some point. All right. Mastering technical analysis in forex trading. Mastering technical analysis in forex trading. So today we are going to understand the power of technical analysis. Next week, we would understand the power of fundamental analysis. But today, we are going to look at technical analysis. And what are we going to look at in technical analysis? We'll be looking at some of the tools, risk management, positioning sizing, leveraging, identifying trends, a whole lot of stuff. We're going to learn a whole lot of stuff. All right. Okay. Okay. So let's go on. Let's go on right away. We are going to go into the introduction part. So today's presentation, we are going to focus on technical analysis. How can we use technical analysis to the very best, all right, of trading? How can we use it? So in our previous class, that was from Monday, we talked about the fundamentals, the basic stuff, right? Today we are going straight to technical analysis. So we'll be looking at some of these things like some indicators, how to identify trend, how to predict market movements, all of these things we'll be looking at it today. So first of all, let's look at the basic one. Basics of technical analysis. What is the basic of technical analysis? Last time I mentioned that in the year 2000, the US economy was at its knees, right? At its knees. And then they did certain things. And these things actually move the US economy to a certain level. Okay. So if things kick off from bad to good, if US is facing the same problem today, what do you think they were going to do? They're going to do the same thing they did way back. All right. That's very simple, basically. And if that is the case, that is going to draw out the same charts that he drew way back. That's basically technical analysis. So in technical analysis, we study the charts with some help of some technical tools. So we study the charts. After studying all of these things, we will be able, all right, to predict the directions of the market and whatsoever. That's simple. Very, very simple. Okay, so let's go for it. Technical analysis is the study of market data, primarily price and volume, to identify patterns and trends that can be used to predict future market movements. It's a crucial tool for the forex traders, a very crucial one, right? It's a very crucial tool, allowing them to make informed decisions based on the performance or the historical performance of currencies. That's the basics. That's the very simple thing, as simple as ABCD. The core principles of technical analysis includes identifying support and resistance levels, analyzing chart patterns, and utilizing technical indicators to gauge markets. So we're going to gauge market momentum. Okay. These are some of the things. So technical analysis involve all this stuff. It's involve all this stuff. So we'll be looking at the basic technical analysis tools. We'll be looking at some of them. I don't know, today we would move a little faster than we did the previous day. Today we're just going to move a little faster than we did the previous days. All right. Okay, good. Let's go for it. Basics of technical analysis. What are the basics of technical analysis? In the forex market, technical analysis is particularly relevant as it allows traders to make informed decisions based on objective data rather than relying on solely on subjective factors or emotions. What does that mean? I told you earlier on that we have the fundamentals. These fundamentals actually can give you a kind of feeling or emotions, which is fear or greed. All right. Market is driven by fear or greed. So when market is at the toppest or is at the peak, right? Greed would make you start selling it. Fear will make you close your positions if you are in the buy. So it's driven by fear and greed. But these things are not influenced by technicals. So technical traders, they don't care. Technical traders don't care about what is happening between Israel and Hamas. They don't care. All they are looking at is what the technical tools is telling them to do. That's all that they care about. Okay? Perfect. Let's move on. So the beginning of every technical analyst, is support and resistance or demand and supply. That's the beginning of every technical analyst. So every technical analyst, when they start either support and resistance or demand and supply. I know most of you, if I should ask, you will say it's true. And some of you also use some of the indicators like moving averages, trend lines, RSI, or relative strength index, or stochastics, zigzags, parabolic SAR. Some of you use all these tools, right? So when you use these tools, it's actually going to identify or help you identify. Oh, really? It's going to help you identify your trade. So where are you going to put your entry, where you will put your stop loss and all of that. These are the help technical analysis, technical tools help us with. All right. Once we get all these things put together, the tools we will be using, we can equally use it to formulate a trading strategy. We can use it to formulate a trading strategy. Okay, that's basically it. We can use it to formulate a trading strategy. And once we have these trading strategies, we can put in some rules here or there. And then we can make a trading decision which can help us in our success or the road that will lead us to success. So as a trader, these are the things that you have to do. Find the tools that works best with you, put them together, start trading with them or playing with them, and then you're going to get your own trading strategy. We would build a trading strategy along the line. All right. It's not a strategy that I used before. No, I always teach my students, and then we build strategies out of nowhere. Right? That's basically it. So we would build a strategy in this course, and then we'll learn how to use the strategy or fine-tuning the strategy and even using them. All right. So let's look at price charts. Price charts. A lot of you would have seen that the charts or the most important technical tool that we use is the candlesticks. All right. But that is not only the main tool. We also have other tools or other chart patterns. Other charts. We have the line charts, we have the histogram, and then we have the bar charts. Okay. We even have Renko charts. We have Renko. We have so many of them. We have so many, but the most popular ones is the line chart, and then the candlesticks, followed by the bar chart and the line chart. These are the most popular ones. But we have other ones like the Renko chart, and then some other ones. Right? Perfect. So the first thing we have to do is to learn these charts and how to use them. These charts. Because they play a crucial role in technical analysis by providing traders with visual references to identifying trends, patterns, and potential support and resistance levels. They are very, very important. They play a crucial role. So as a trader, you first of all have to understand these things, first of all. We'll also be looking at some of the tools like the moving averages, RSI, MACD, and then Fibonacci. We'll look at all these tools. Then we would put these tools, some of them together. We will put them together, and then we are going to use them. I won't show you now because this is not where we're going to go into it. So I won't show you. So what is moving average? Probably some of you have heard the name or you have even used it. So moving averages smooths out price data to identify trends by calculating the averages price over a set period. Over a set period, they can signal buy opportunities or sell opportunities when the price crosses above or below the moving averages. That's basically what they do. Right? So if you are using a moving average, we are going to pick, let's say, 20 candlesticks or 30 candlesticks or 50 candlesticks. And then we are going to find the averages of these candlesticks. And then we are going to use it to draw a line, right? And this line would give us information whether to buy at X point, sell at Y point, or do Z, right? That's basically what it does. Then we have the relative strength index. The relative strength index, we call it the RSI. The RSI is an oscillator. Remember, we have the trend following indicators, We have the trend following indicators. That is the moving averages. They follow the trend. Then we have the oscillators. The oscillators, they move up and down. They move up and down, all right? And then we also have the MACD. All right. Then the Fibonacci tools. So let's look at the relative strength index. The relative strength index is an oscillator. It moves up and down. It moves crests and troughs, highs and lows. So when the oscillator is at the top, all right, above 80, when it's above 80, then it means that the asset is at overbought, is too high. And people or investors will tend to start selling the assets. All right, good. Now let's look at it. Let's look at this. When we take the other one, which is the MACD, some people call it the MACD or the MACD. The MACD, its real name is moving averages, convergence, divergence. All right. So we use to measure the speed. This very indicator is used to measure the speed, okay, or the momentum in price. So sometimes price will do the opposite whilst the MACD is doing another thing or another thing. All right. And when that happens, that is where we call divergence. Convergence is when the two of them, that is the price and then the oscillator, the indicator, is moving in the same direction. They are converging. When they move away, they are diverging. So this indicator can be used to pinpoint or to find very good trades, entry and then exits. All right. All right. Let's go. Let's go. Let's look at the Fibonacci tools. And the one that we are going to look at as a beginner is the retracement tool. So the retracement tool, commonly we use to identify potential reversals. All right. That's the basic way of using it. If you have a question, please write it in the chat box or in the question and answer session. I would see it and then I can answer it. All right. Perfect. So that is basically these two. We can also use it to find the proportion at which an asset has moved. So if the asset has moved 100% and then we are doing a retracement, how much have we retraced when we move 100%? Probably we retrace 60%, we retrace 50%, 30%, or even 10%. We can measure all of these things. And that is what the tool is used for. We have other tools like trend lines, parabolic SAR, oscillators, and then okay, we have trend lines, parabolic SAR, and then oscillators. Let's go for it. What is a trend line? It's one of the most simple but most used tool in trading. Very simple but very, very powerful as well, right? Because it helps us draw two types of support and resistance, two types of it. Mostly when traders learn the types of support, they only learn one type of support or resistance. But we have two types of it. The very first one we call the horizontal support and resistance, and then we have the diagonal support and resistance. The horizontal, we call them key levels, and then the diagonal is diagonal support and resistance, right? Trend line is known for this work, all right? So it's a straight line that connects 2 points or more price points and extend into future to act as a line of support or resistance. Trend lines are used in technical analysis to help traders identify the directions and strength of the trend. They are used to make trading decisions based on the assumption that the trend will continue or will reverse, right? That's basically what trend lines are used for. Then we have another tool called the parabolic SAR. This tool is very simple, but at the same time, sometimes very, very effective. Okay. I myself don't use it. I don't like it and I don't use it. But some traders really, really love it, and they said it's very, very good. The parabolic stop and reverse. The parabolic stop and reverse, that's its name, parabolic SAR. Indicator is a technical analysis tool that is used to determine the direction of an asset price movements and to provide potential entry and exit points. Developed by Jay Willis. All right, so it's very, very simple. I personally don't like this very tool. I don't like it. Probably you would also find reasons to like it if you do a little research to it, right? But my most one I use is this very one called the trend line. Then we have another tool called the oscillator. This one is just like the RSI. It's also an oscillator. It's also it's also an oscillator. Its name is oscillator. Some people call it, especially the Nigerians, they call it oscillator. My Nigerian brothers, I greet you. All right, so this is the oscillator. All right, the oscillator. It also produces crests and troughs, that is highs and lows. It's used to define overbought and oversold regions in the market. An oscillator is a type of technical analysis indicator that fluctuates above and below a certain a central line or between two extreme values. Oscillators are used to identify overbought or oversold connections in the market and to generate buy or sell signals based on momentum of price. Okay. All right. So let's move on. Applying technical analysis, applying technical analysis in forex trading. All right. So now we're going to look at how to apply these tools. Okay, especially the point at which we use to identify trends. Okay, and then now how to use these indicators. We would be looking at them very, very shortly. We'll be looking at them very, very shortly. So I would show you how we can do these things. How? I want to go into my Do Prime account, but I'm pretty good on TradingView right now. Right, so I'm going to use my TradingView account. I'm going to use my TradingView account. A lot of you, or some of you actually have seen these tools, use them, and then you've seen how effective they are. I wish we can do this on MT4 or MT5. So I would love to change quickly. I would love to change quickly. Okay, 1 second. All right, no problem. No problem. Let's go on. Let's go on. Okay, guys, we'll come there. When we get there, then we would be using the platform itself. So one, identifying trends. Analyze price charts to identify the prevailing market trends, whether it's bullish or bearish or a range. Market actually has 3 phases. The first phase, which is the trending phase. The second, sorry, 2 phases. The first phase, which is the trending phase. The second phase, which is the ranging phase. In Elliott wave, we say impulse and corrections. So markets, so let's look at it in this perspective or in this direction. Okay, so we're going to look at it that way. Okay, so we're going to take a look at all of that, utilizing indicators, applying indicators like moving averages, mark the RSI to confirm the trends and identify potential entry and exit points. We're going to look at all of these things. All right. We're going to spot possible support areas and then resistance areas in the market, possible ones. All right. Let's go for it. Then we're going to look at some basic chart patterns and then how to trade them. Some basic ones. So the first one we're going to look at is the head and shoulder pattern. The head and shoulder pattern. First of all, let's look at a little bit about the pattern. The head and shoulder pattern, sorry, chart patterns. So as a trader, you have to learn. As a trader, you have to learn some patterns, and they are very, very important. These patterns actually helps a lot. Okay. One is the head and shoulder pattern, double tops, double bottoms, triple tops, triple bottoms, head and shoulder, inverse head and shoulder, and then triangles. In the triangles, we have 4 different distinct types of triangles, and we're going to look. I don't think we will look at all of the 4 different types, but we'll look at the triangles. Probably all the rules are the same. So we'll look at them, right? So let's go and get the head and shoulder pattern. So this is how the head and shoulder pattern looks like. We got the head, the shoulder, that is the left shoulder and then the right shoulder. Why do we call it the head and shoulder pattern? The chart itself, this is how it looks like. It looks like this: 1, 2, 1, 2, 1, 2, right? With this 7 as the neckline. If you look at it carefully, you can see that it's like some human being. This is the head of the human being. This is his right shoulder. This is left shoulder. And this part we call the neckline, right? Okay, let's look at this. Let's look at that. Let's look at how we're going to actually do this thing. Guys, 1 second. Okay. Let's go. So the pattern actually, the name of it is just like whatever we look at. Okay, like this. So this head and shoulder. So you can always see the head, you can see the left shoulder and then the right shoulder. Very simple pattern, but it's one of the most powerful patterns to trade in Forex. One of them. Okay. It's a very, very good, simple pattern. Very, very good one. All right. How do we trade it? How do we trade it? How do we trade it? Okay. There are 2 ways of trading these patterns. There are 2 ways. So when you have the left shoulder formed and then the right, so the very first way of trading this very pattern is that you project this and then you wait. Immediately price gets back in here, you start selling. This is the first way, and we call it the aggressive way. Your entry will be here, your stop will be above the head. All right. Take profit 1 will be at your neckline, this area. That's where your take profit 1 will be. And then your take profit 2 equals this part and that part, which will be like this. So take profit 2 will be here. This is where your take profit 2 will be. That's basically it. Very simple. Okay? Very, very simple. So if you see this pattern and you want to trade it the aggressive way, immediately you see the pattern get here, rejects this level, and start to come up, you are going to place the trade. You are going to place the trade right here. This is the aggressive way. Aggressive way. But we also have the very safe way of trading this same pattern. The very safe way. Now we get here, you wait till we break this neckline and sometimes have a retest. Then you can trade this thing. Now you measure the head to the neckline and then you project it to the downside. And that is where your take profit will be. Okay? That's where your take profit will be. Very, very simple. Very, very simple. Very, very simple pattern. The opposite is true. The opposite is inverse head and shoulder. Like this. The opposite is true. Okay? What time frame should you look for head and shoulders? Head and shoulders appears on all time frame and all time scales. All right. So if you want to trade head and shoulders, then you should be ready to trade. But when you're picking it from the higher time frame, the possibility or the accuracy is higher. Right? Good. Okay, let's move on. Let's move on. So we move on. All right. We are going to look at double tops and double bottoms. In recent times, some of you call it the M pattern. They call it the M pattern, double tops, left top and right top. Some of you call it the M pattern, the M pattern. Very, very good pattern as well. So with this pattern, how do we trade it? Once price makes the first high and then is going back, then you attack it. This is the aggressive way of trading this very pattern. This is the aggressive way. So you enter immediately right from here, and then your first take profit level would be here, the neckline. All right. Then when you break, you find a retest, and then you can also measure again from this top to this, and then you triangulate it downwards. Sorry, you extrapolate it. All right. That's how you can trade this very pattern. Or they call it the W pattern, the same way. So aggressive way is to by trading it right from here. But if you want to trade it the more safe way, then when you get and price start to reject, you wait for it on the neckline. Let it break and possibly do a retest and then go down. That's the best way. Right? The next one we are going to look at is the triangles. And let me give you some clues in this particular patterns. Sometimes we would see divergence on our indicators. When we come to combining them, you would understand. So let me leave it for now. We would move it, okay? In fact, today my team is playing and my mind is not at rest because my team is playing and I'm not watching. It's part of its duty course. Okay. So let's go to triangles. So in the triangles, we have ascending triangle. This type of triangle, the top is flat, but the bottom rises. All right? This is what we call the ascending triangles. When it happens this way, more likely, because of this rising bottom, it will go up. It will go up. Then we have descending. This type of triangle, the bottom is flat. All right. And then we squeeze it like this. Most of the time, it goes down. Most of the time. Then we have the symmetrical triangle. This triangle is like this. It can go up, it can go down. This is a triangle. In fact, triangles have no directions. That is why I don't trade them. Because you see this kind of triangle, which is the ascending triangle, it can do this and probably come down again. So I don't trade triangles. My student knows that very well. I don't trade triangles. But you can also probably find a way of trading them. And then you can put in 1 or 2 rules to trade it. Trading is all about you. It's not about someone else. It's about you. Right? So if you are a trader and you want to trade, then it means that you have to do things that will suit you than anyone else. Okay? That's one thing. That's one thing. All right. So it's like that sometimes. So you have to be very, very careful whenever you are actually doing something. All right. Okay, my whiteboard is loading. My whiteboard is loading. All right. I think my whiteboard is ready. And then we can go to the whiteboard. So as a trader, you have to understand. You have to understand, especially when you have a triangle, undo. When you have a triangle, okay. 1 second, guys. Bingo. I'm actually doing something on one of the screens. So that is why you can't see my screen. All right. I just don't want to show certain things. Okay. All right. So now I'm done and I would start showing all that is in here. Perfect. Okay. Let me share the screen. Let me share the screen. So I'm going back to my screen. So whenever you pick your MT4, MT5, usually it comes with a default green background, green. There are so many things you can do to it. There are so many things you can do to it. So today we are going to look at 1 or 2 things, then we go into the charts, play with some of them. All right. Let me get a white background, black, blue, red, and then blue. Good. We are done. I won't do much with this. So this is what I'm going to use to teach you. All right. First of all, when you look into the charts, this is not very visible, but I'll make it visible to you. So you can see we have this, we have that, we have this, we have that, we have this, and then we have that. What does it look like? What does it look like? Can someone tell me what it looks like? Can someone tell me? Can someone tell me what it looks like? Anyone? We have this, we have that, we have this, we have that, we have this, and we have that. Can anyone tell me what it looks like? Anyone? What it looks like? What does it look like? Yes. So this is an head and shoulder pattern. Very simple. It wasn't looking visible until I drew it out. So especially somebody says triple top. No, the answer is head and shoulder. All right. This is a head and shoulder pattern clearly visible in the chart. Now, when you look into the chart again, you're going to see this very one. 1, 2. So which one is this? In today's or in current times, usually you call it the M pattern. This is a double top pattern, and price should play accordingly. Right? Price should play accordingly. So who keeps raising their hand? You can ask your question direct in the chat box and it will be answered. Okay, very good. Now let's look at the other ones that I spoke about. The other ones, we're talking about triangles. Let's go check it out. So there are so many triangles, and in current times we have triangle forming everywhere in the market. You can check them at all time scales. See, you have a double top right there. Undo. You have a double top right there. Double top. And price did the move. You see, the M pattern. Okay. And it did exactly. So the time frame, somebody was asking about the time. The time frame doesn't matter. What matters is you, how good you'll be able to spot them. Let me look for a triangle. My eyes are not good with triangles because I don't trade them. I don't trade them at all. All right. You can see the same pattern happening right here. The same pattern. The M pattern is happening. All right. So basically that's that. We would have the session where we'll look at it critically. Okay. The session where we'll be looking at it critically. At that part, that is what we're going to do. We are going to look at all the patterns, all the charts, rules, everything like step by step so that we get it. Okay, let's go on the next one. So recognizing chart patterns. So you have to learn. That's one part. That's the most important part. You have to learn to do what? To recognize these patterns and trade them. You have to learn. It's very, very important. Very, very, very important. What we do is that we study the charts. We study them. It's part of our work. So I go to the chart and I start looking for these patterns over and over and over and over again. Over and over and over and over again. That's what we do. So learning to identify common chart patterns is crucial for effective technical analysis. Patterns like head and shoulder, double tops, and triangles provide important clues about market psychology and potential future price movements. By studying the visual shapes and structures of these patterns, traders can better anticipate trend reversals, breakouts, and consolidation. So as a trader, if you study these things, it really, really help you. It really, really, really help. It gives you a long exposure, all right? It gives you that kind of flair to be in the market because you know exactly what we are doing. Okay, let's go on. I think I've spent a lot of time today. I've spent a lot of time. All right. Now let's look at the triangles. I told you guys I don't trade triangles. I don't. You as a trader, you would also come to know the type of charts that will help you. Okay? Or the type of patterns that will help you. With me, I'm not good with triangles. If I see triangles, I will usually wait for price to confirm it before I trade it. So one, identifying patterns. Be careful, okay? Identifying the chart patterns. Carefully analyze a chart to recognize common chart patterns like head and shoulder. So this is what you have to do. When we are done with this class, go to the charts. I can be here and I will talk the whole day. If you don't do anything about it, there's nothing you are going to learn. Mine is to impact the knowledge. Yours is to put the pieces together on a chart. One, go to the chart, identify head and shoulder patterns or inverse head and shoulder patterns. Once you are able to do this, you will be very, very good. Then you can continue with double tops or M patterns and then W patterns. Double tops and triple tops or double tops and double tops and then double bottoms, triple tops and triple bottoms. Okay, you can equally do that. All right, let's go on. So first of all, identify the patterns, understand the context. If you understand the context, what do you mean? Consider the overall market trend and other technical indicators. So before I tell you guys, hey, I'm looking for a sell, I have done a lot of analysis. And I have seen that, okay, market should be selling. Okay? Then you have to time your entries and then your exits. That's what you have to be doing. Use the patterns to time your entries and exit points, anticipating the likely price movements. That's basically it. So first of all, learn to identify the patterns, understand the overall market trend, and then do your entries. Okay? This is very simple. Very, very simple. All right. Real chart analysis. So we'll be looking at real chart analysis. In Forex trading, one of the things that a lot of people have stopped doing, one of the things a lot of you have stopped doing, a lot of traders, they don't consider it again, is identifying the trend. A lot of people have stopped. How do we identify the trend? When market is moving to the upside, it makes higher highs, higher highs, higher highs. So you see higher low, higher low, higher highs, each, higher highs, higher highs. That's what market will be doing all the time. That's what market will be doing all the time. If you see that, it means that the market is going to the upside. And when market is going to the downside, it makes lower lows. lower lows, lower lows, LL, 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 LL. Then you have LH, lower highs, lower highs, lower highs, and lower highs. That's what the market, if it is trending in one direction. So anytime you see market trending, watch if you can find these things. Then it means that the market is actually in a trend. Now we are going to look at a chart. Let's see if you would recognize what we spoke about now. What is the market doing currently? Market is moving to the downside. So this is the low, lower low, another lower low, another lower low, lower low, lower low, lower low, and it goes like that. So what is the market doing? The market is going to the downside. You can see 1, 2, 1, 2, 1, 1, 2, 1, and it keeps doing that. So market is moving to the downside. It's trending to the down. That's a downtrend. Immediately it shifts or it changes, you will see it. The market will be going to the upside. If you know how to do this thing, then you are good with the market. You are very, very good with the market. You will not have any problem again. All right, you will not have any problem again. Okay. So one of the things that traders have forgotten and they don't do is recognizing the market trend. Analyzing the overall market trend to determine the large context, that is the large structure, and assess potential trading opportunities accordingly. So traders have forgotten this part, which is one of the key. What is the other key? Identifying support and resistance levels. Like I said, we have two types, and I'm going to show you now. So let me show you now. Watch this. I just drew this trend line just like this. All right. I'm not following anything, but you're going to understand. So can you see how market is actually moving? This is the market structure. Now, if you watch it carefully, whenever market touches this, it bounces up. When we touch, we bounce up. When we touch, we bounce. So anytime we are going to touch again, market will bounce. All right, that's basically all the basic things about the market. These are the basic things. All right, these are the basic things. So if market gets into the lower part again, what will you do? You know what to do. You can buy. When it gets to this top, you can sell, but we don't do that. Find the direction and move in the direction of the market. It makes sense. That's what we have to be doing. We have to move in the directions of the market. We don't do opposite. Okay? I see some people giving me thumbs up. Yes. So this type of support and resistance, we call it diagonal support or diagonal resistance. So this is the diagonal resistance. diagonal resistance, diagonal resistance. This is the diagonal resistance, and this is the diagonal support. We are waiting for the last one. Right? So when you are trading, always watch. So sometimes I'll tell you guys, watch the levels. Yes. And then this one, these type of support and resistance, we call them key levels. So you see, there's a key level. When price got here, we did this. What is the possibility that we won't do this? So this becomes a key level. This is another key level. But this time around, that level was broken. And this is another one. All right? So we have key levels, and then we have dynamic levels or the diagonal levels. All right? Perfect. Hey. Today I have actually spent a lot of time, but that's fine. Then we can also include some indicators. Let's put in some indicator. So applying technical indicators. So let's use a technical indicator, one of them, to help. So we are going to use a technical indicator to help. Let me use what should I use? RSI. So I'm going to use this indicator called the relative strength index. Relative strength index. Okay, RSI. Relative strength index. So this is the RSI. All right. Now watch something. Watch something. Anytime, I don't know the settings I'm using, so let me check. Let me make it 3. No. 10. Let me make it 10. Let me see. Okay, let me make it even 7. I don't know exactly what I'm doing. Don't think I'm doing something. Okay, 7 is good. 7 looks good here. So watch something. Whenever we hit 70 and we drop, you can see price make some moves. So you can see, so quickly we can be doing something with this. All right, we can be doing something with it. What else are we seeing? This is a divergence right here, and that is our divergence right there. Okay, so this is telling me that likely price can drop even further. Price can drop even further. You can see. You can see. So there's a divergence right there. So sorry guys, we diverge from the prices. We are divergent. I told you the oscillators are used purposely for divergence, right? And then to time the entries. So this is a divergence, and you can see how accurate this was. So if you start trading right from here, you pick a sell, you pick the next sell right here. Now you see you got the accurate entry, and that is it. Then what happened again? The next point is here, and that is somewhere here. The next point is here, and that is somewhere here. The next point, okay, the next point is here. The next point is here. You can see how interesting these tools can help you position your entries. Okay, let me mark them with the the vertical line. Let me mark them like this. All right. You can see how nice these tools are actually helping. Okay. And now we are currently back to base right here. Okay. So we can use it to help guide our entries. You can use the oscillators. You can change the settings anyhow you want it. Okay. You can change it. And it's good. It helps. Right? Perfect. Let's continue. Then analyzing the forex charts. We also have to play with the charts. You want to be a footballer. You cannot be reading football books and you think you will become the next Messi. You have to play the ball. You want to be a forex trader. You don't have to read books. When you read the books and you are done, come and practice. But a lot of you, your main problem is that you come and watch my videos, one, and then you go and sleep. You will not do anything again. That's basically it. If you do that, you cannot be a trader. I think we have done enough with these ones already. My time is fast spent already. So convergence is the direction. Okay, I'll come to that part. All right. So trend lines, moving averages, oscillators, candlesticks patterns. We would use all of these things, or we use all of these things to make a trading decision, right? To make a trading decision. Like I've shown you oscillators. I haven't shown you moving averages, but I've shown you the trend lines, oscillator. We have seen some of the candlesticks patterns. Sorry, chart patterns. We have not seen candlestick patterns. That is a whole course on its own, right? So we will look at them one after the other. Like I said, we cannot use one day to explain all of these things. At this point, I should have gone into certain things, but I would not go. I will jump and then we would go to the question and answer session. At this point, I'll pause here. All right, guys. So at this point, I would say thank you all for coming. All right. We'll be having the next session coming Monday. Please make it a point to join me and then let's get all the questions and answers. All right. So if you want to know more, please get in contact with any of us and then we can help you set up right from today and then you start making some money in your account. Don't forget, this particular training is sponsored by Dope Prime, official sponsors of Manchester United. My name is Dr. Mola, and I say peace.